Webcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to CPA Academy. My name is Christopher, and I am so happy to welcome you into today's webinar on best practices in crypto tax reporting and workflow automation. Our presenters today are John Wondrisco and Greg Pope. Before we get started, I wanted to go through some housekeeping items and do some quick technical checks to make sure everything is working for you. So first, if you don't mind, go to the GoToWebinar control panel. Just look on the right-hand side of your screen, find the questions drop-down, and in this panel, let us know that you can hear the sound of my voice. You can see the slides that Greg and John have up on the screen for you, and just let us know where you're listening in from today. Starting to see those responses pour in. We are excited to have each and every one of you here with us today. Seeing some familiar names, thank you. Now, if anyone's having any technical trouble, let us know in this same questions panel. And keep in mind, there are quite a few of you and only one of me, and I will do my absolute best to get around to each and every one of you as quickly as possible. If you have any questions for Greg and John during the presentation, you'll put them in this same panel and they'll be able to address that as well. Now that we know things are working, let's go through some housekeeping for our credit. This is a 1-hour webinar and qualifies for 1 CPE credit. And the way you earn that credit is fairly straightforward. Just stay logged in for 50 minutes of our allotted time, which is 60 minutes, and answer the poll questions. We'll have a total number of 4 polls during today's webinar. And in order to get that credit, you'll need to answer at least 3 of those polls. So if you're having any trouble answering or seeing the poll questions when those are launched, simply refresh your page or make sure it's not behind another window. And if you miss one, don't worry, we have an extra one baked in at the end for you. Your CPE will be issued by the end of the day and will be available in your CPA Academy account. And I also want to let you know we are recording today's webinar, and that archive will be made available to you by the end of the day as well. Lastly, take time to go to the handouts section of the control panel, and you'll find a PDF to follow along with today's presentation. And now that we're all set, let's turn today's webinar over to our presenters. John and Greg, the floor is all yours.
Hey, thanks so much, Christopher. Good day, everybody. My name is John Wondrisco. I'm the Chief Commercial Officer at Verady. I joined Verady at the beginning of October after a 22-year career at Thomson Reuters in their corporate tax and accounting space. I'm real excited to be talking to you today and taking you all into the great world of crypto tax reporting workflow automation. Greg?
Yeah, thanks, John. Thank you to all of today's attendees. My name is Greg Pope. I'm the Vice President of Marketing for SurePrep. Been with SurePrep for about 13 years now. I've worked in the tax and accounting industry in some sales or marketing role for over 20 years now. Got a lot to get to today, and Christopher also already got the housekeeping out of the way. But John, if you want to move to the next slide, we'll just talk about questions. Obviously, as I think everybody knows, all the attendees are muted, so we can't hear you. Doesn't mean we don't want to hear from you. We definitely encourage questions. So if you have them, please use the GoToWebinar control panel to ask typed questions. There is only one of Christopher, and there's only 2 of us. For John and I, we're going to try to answer as many questions as we can, but this is a very, very large group. So my guess is that we will not be able to get to all of the questions, and if that's the case, we will follow up with you. So all questions will be answered one way or the other, either on today's session or as a follow-up. So let's get to the agenda. First, really, 3 parts of the agenda. John, if you want to move to the next slide, are going to be things that John takes us through. John is the cryptocurrency expert. I am not. So we're going to start with an overview of cryptocurrencies and how they're taxed. Going to talk about the information that you need to gather from your clients so that you can properly prepare their tax return. Recognize some key considerations in determining taxability and calculating the crypto tax, and then towards the end, then we'll talk about identifying and using the right technology that can save you time and automate some of the calculations, eliminate the data entry into your tax software, and things like that. So before we get to the presentation, let's get to the first polling question. So let me go ahead and launch that. First question is, nope. Whoops, launched the wrong question. So we're going to go out of order. This one is, how would you describe your knowledge about cryptocurrency? You have no knowledge. You've heard a few clients' cryptocurrency reports, or you have lots of experience in cryptocurrency trading. Give everybody about another 20 seconds or so to answer this question. Then we'll close the polling question and show the results. All right, got about 95% voted or so. I'm going to go ahead and close the polling question now and share the results very quickly. I'm not too surprised by the results. John, are you?
No. It's a growing area, and so we're excited to see so many fresh faces into the crypto world.
All right, so let me go ahead and hide this, and we'll go back to the slides.
Okay, let's go ahead and get things kicked off. So for everybody who's new into the crypto world, we're going to start off with a little bit of a crypto one-on-one. And really talk about how the IRS is looking and treating this. And I'm going to warn you in advance, there's going to be a little bit of nerd stuff here at the beginning, but I promise not to go too deep, and just to give you a little bit of context and awareness on some of the things that you might see and understand some of the concepts. So let's just start off with the very basics. What is a cryptocurrency? One of the good definitions I've seen is it's a decentralized digital money designed to be used over the internet. I've also heard somebody kind of describe it as if gold and the internet had a baby. A couple different types that you may see, and heard of as Bitcoin, Ethereum are definitely the big two of the major ones, but there's also Litecoins, Bitcoin Cash, and thousands of other cryptocurrencies. The key things to kind of take away though is they really help to transfer value online without the need for a middleman. So there's not a bank or a payment processor that takes place here. It's also not controlled or issued by any government. It's really designed to be distributed across all the different participants in the digital currencies network, and they all work together to keep everything in shape and keep everything organized and together. And it's all really tied underneath that with that blockchain technology, and a great way to think about it is really like a bank's balance sheet or ledger that's keeping track of all the different transactions. Now, again, kind of detailed slide here, but the key thing to take away from it is as each transaction happens, they're all written into a block. And then all the blocks are chained together cryptologically, where they're tying those pieces in place so that nobody could ever make any changes to any of the blocks that have happened in the past. And it's actually the miners, we'll talk about them in a little bit, that actually do that work to tie all those pieces together. Now, one of the other technical things to keep in mind is you're going to hear a lot about public keys and private keys. The most important thing is that's actually the part of the cryptology or cryptography that's used with the blockchains. And just remember that your public key is really your account number, and the private key is analogous to your password or what you're using to sign any transaction. So public key, account number, private key, password. Now, there's really a couple major ways that people are transacting in crypto. People are buying and selling things online. They're also, and mainly a lot of people are doing investing, and I think that's where we've seen the major increase in Bitcoin's price and really all cryptocurrencies prices recently, as we're starting to see institutional investors really moving into this space. Those two areas are really going to fall into the capital gains category, and we'll talk about that a little bit further on. Now, you may also hear about staking and mining. These are some of the activities that are behind the scenes and actually running the blockchains. And people that are involved in those activities are actually earning income that will need to be reported for tax purposes, and we'll dig a little bit deeper into that part as well. Now, there's a couple main ways that you actually interact with the blockchains to actually buy cryptocurrency or exchange cryptocurrency or do any of the investing or the activities that you're doing. The first one are called exchanges. And these are a service or a platform that allows you to easily buy cryptocurrencies, trade cryptocurrencies, for US dollars or any other, currency that's out there. Now, exchanges are a lot like banks. They use custodial accounts to hold all the funds, and then they have an internal ledger that they're actually tracking all of the trades or any of the exchanges that are taking place. Now, we'll talk about this distinction a little more, but these are all made off-chain. So there's not actually any crypto that's being transferred back and forth. It's only making those changes or movement inside the ledgers. Now, there's, according to CoinMarketCap, one of the big sources that you'll get acquainted to as you get more into crypto, there's a little over 300 exchanges they're actually tracking. They could be anywhere from, $8 billion in annual daily volume all the way down to, a couple $1,000s. Coinbase is one of the biggest. They're actually announced earlier this month that they're in the process of filing for an IPO. And they've got over 35 million active users on their platform. So just starting to give you a little bit of the scope of how crypto is growing and how widespread it is. And in fact, we're estimating conservatively that somewhere between 12 to 21 million or 8 to 14% of all taxpayers are likely active in crypto and will need to be considering crypto as they're filing and preparing their returns. Now, where exchanges are like the bank, wallets is actually where you're holding the crypto yourself. And a wallet is either a program or an application or a service that's really holding on to those keys. That private key and the public key that are used to sign and to really have authorization and control over your crypto. Wallets don't store cryptocurrency. It's not like your traditional wallet that you have in your pocket or your purse. They're really just storing those keys that are used to sign transactions that allow you to actually do something with the Bitcoin that you own. And again, it's really key. All transactions that are on-chain are written into the blockchain, into that public ledger. Now, as your clients start to get more involved in it, they may come across different types of wallets. So there's two main categories of hot wallets, where really it's designed to make it easier to do transactions. And then you also have cold wallets, which are really more for long-term storage and are more secure. And as we talk about wallets, there's a variety of different types. Your online wallets are in the cloud. A mobile wallet, as you'd imagine, is an app that's running on your phone. You can even have a wallet that's on your desktop. But then, from a cold wallet perspective, you'll also have clients that'll have hardware wallets. So it's usually a device like a USB key or a USB token that actually holds and encrypts all their data. And some people even have a paper wallet. So you can go and actually print one of these out online and put it in a safe or a safety deposit box. What's key about all these different wallets is highlighted in that red box is your address. And that's your public key address. And that's really like your bank account where all your crypto is held. And that's where you can send it to somebody, send from it. You can receive crypto from somebody else using that address, or you can actually go onto the blockchain and look for all the transactions that are happening associated with that particular address. Now, with that little bit of kind of a 101 on crypto out of the way, let's actually start to look at it from how it's treated from an accounting and tax perspective. And there's been a lot of discussion as it's evolved. Is it a cryptocurrency? Is it a virtual currency? Is it a digital asset? Is it a commodity? As you can see, whether it's the European Central Bank or the Financial Crimes Enforcement Network or the SEC, all these government agencies are really trying to figure out where it fits and how it should be treated and how it ties into traditional investments. The key, though, is from an IRS perspective, it's property. And if you look at IRS Notice 2014-21, which is a key one in the crypto world, they're very clear that it's not currency, it's property. And so because it's treated as property, all the typical tax treatments around property come into apply. And they're also very clear about that on the IRS website, where all of the general tax principles that apply to property also apply to virtual currencies. And so let's dig into a little bit of detail on a couple of those areas. So from a taxable and non-taxable income perspective, whether you get paid by your employer in Bitcoin, whether you're a miner and you're earning Bitcoin as part of participating in the blockchain network, or you're actually selling goods or services in exchange for crypto, all of those items are income and are treated as such. and are treated the same way you would on the, receiving wages or earnings from other non-crypto activities. Also note, keep in mind too, that if you're being paid or you're earning, you may also be subject to self-employment taxes or FICA, etc. Now you can also make charitable contributions in crypto. And so you can donate your crypto to charities and receive the same benefits as if you had donated cash or stock or other items, in a traditional sense. And a lot of the same rules still apply. And then the big one is around the sale or disposition of assets. So if you're exchanging, crypto for goods, or you're selling crypto, or you're even trading one crypto for another crypto, like from Bitcoin to Ether, those are actually all considered to be gains and losses and capital gains and loss transactions, and all the capital gain and loss rules apply. And we'll dig into a little more detail about that as we go along. Now, with that kind of background in place, let's start talking about some of the information that's going to be needed from taxpayers. What are you going to need to get from your clients in order to be able to, help them prepare their crypto taxes? So what we'd love to get, like we get with traditional investments, is a 1099-B, something that actually breaks out for me what all my proceeds are, what my cost or basis was, and it makes it very straightforward to figure out what the gain and loss is. Unfortunately, what the client's likely to provide you, if anything, on an information reporting perspective, is going to be a 1099-K or a 1099-NIS. Unfortunately, the exchanges and a lot of crypto world and the IRS really haven't figured out necessarily how to handle information reporting for this. And so, the exchanges and a lot of the big crypto organizations now are starting to try to do something, to appease the IRS and to start providing some information around activities that are happening on their networks. But the key thing here is, with the K and with the MISC, really what we're doing is not providing any beneficial information, because knowing what proceeds are without understanding basis, they're also not taking into account situations where crypto may be moving out of their exchange. They're considering those all to be proceed type transactions. And so it's really, more than anything, it's just a big arrow to the IRS to point them at your client or point them at the taxpayer, saying, hey, there's something going on here with crypto that the customer, their client, needs to be reporting. And so with that in mind, really it's up to your clients then to start to provide you with the detailed information that you need in order to help them calculate their crypto taxes. So probably 80% of all people that are active in crypto are holding most of that crypto on an exchange. And again, there's hundreds of exchanges all over the world. They're all going to provide some form of a transaction export. Now, the good ones are going to give you some kind of a CSV or an Excel file with the transactions all broken out. It's also common to get just PDFs. And one thing to keep in mind too is that every exchange is going to have its own format, and not all the exchanges are standardized too. So, some may call Bitcoin BTC, and other exchanges may call it XBTC. So, as a tax preparer, you've really got to start to understand the information coming out of each of these exchanges and be able to normalize and combine all that information together to get a true picture of what's happening. Now, if we dig into a little bit of detail on one of these exchange exports, let's look at what we've got and what we don't have. Now, highlighted in red in the transaction type column, you're going to see things like you'd expect, like a buy and a sell. So these are just straightforward transactions where we're exchanging dollars for crypto, or we're selling our crypto for dollars. You're also going to see send and receive. And so this is where we're actually taking our crypto out of the exchange, either putting it on chain or putting it into a different exchange. And then likewise, the other way, having those coming back in. Now, towards the middle, you'll see that we're also starting now to get information about the actual value of this, in this case in US dollars. So we're seeing what the subtotal was, or the actual dollar amount. Then we're actually seeing broken out fees, and then a total that includes the fees. Excuse me. As we'll talk about later, fees are actually very important and can have a material impact on the overall gain and loss for your client. And And then finally, we're also going to start to see information about where it's going. So if you look here on this sent line, we can actually see the amount of Bitcoin that was sent, and then we're actually seeing the public key address that it was sent to. Excuse me. So we've got a reference point of where that crypto went after it left the exchange. Now, there's a couple key things that we're not seeing here. We're not seeing any information really about cost basis. Yeah, if it stayed on the exchange, I do know, okay, this was purchased, and I know what was paid, and I know any of the fees. But if anything happened outside, so for instance, this row 11 here, we can see that we received a little bit of ETH from an external account. So we have no idea where it really came from, and we have no idea what the basis would be on that ETH if our client were to sell it or do a different transaction on it inside the system. And so for that, we've got to start digging a little bit deeper. And we either have to start comparing different exchanges, or we can also start to look at what's happening in the on-chain transactions. Now, remember from the beginning, all transactions are written into the blockchain. And that blockchain is an overall distributed public ledger out on the internet that anybody can have access to and anybody can see, but nobody can really change anything that's happened in the past. So with a client's address, with that, 20 or so character, excuse me, alphanumeric string, you can actually go in and find any transactions that have happened against that wallet over the entire lifespan of the blockchain. Now, a lot of times your clients are going to be using some of the different wallets that we talked about. So cloud and desktop wallets may have an export option similar to exchanges, but unfortunately, most of the apps, your hardware for sure, and definitely a paper wallet don't have any kind of reporting at all. So, at best, what you're going to get is a screenshot perhaps of an app. So in this case here, showing a screenshot of transactions that have happened this year so far. You may also start to get manually maintained spreadsheets. And that may be all the taxpayer can provide, or they're just going to say, look, here are my addresses where all my information is. I need your help in figuring it out. Now, taxpayers can also provide you with spreadsheets. This is a spreadsheet that I actually found just running a quick Google search for cryptocurrency tracking spreadsheet. And this was something that somebody had created that, for their own purposes, and they put it out there on the internet. And so, from an accountant perspective, this might seem like it would be helpful compared to some of the other stuff that we've talked about. At least it's bringing, all the different sources together, and it may have both their exchange and their wallet transactions. But you really have no idea if, how this was put together, the work that went into it, how accurate it was, if there's any broken links or any of those challenges or changes inside. So it's, a very challenging environment for professionals when they start to receive this type of information. Now, what you may also get is really just all of the above. So you may get, a couple of tax information reporting forms, a K or a miss. You may get a little bit of information from an exchange. You may have some information in a spreadsheet. A couple of screenshots may come into place. And really, that's kind of the challenge that you have from a data collection perspective, is bringing all this information. And Greg, it's really kind of analogous back to the old digital shoebox days. Can you talk a little bit about how SurePrep can handle a client that's bringing in this type of information?
Yeah, well, it's difficult. Really, what our scan and populate solution is doing is recognizing those government forms. So like the 1099 miscellaneous that you got there in the background, but if you don't give clients an easy way to give you what you want, what they're going to give you is what's easiest for them. So, spreadsheet is probably not ideal, but it's certainly better than some of the other options. I know you and I had talked about people taking, screenshots of like a Coinbase account. And I said, yeah, that would be bad. How about this? How about somebody just pulls out their phone and takes a photograph of their monitor showing their Coinbase account? That will happen. So unless you give clients an easy way to give you the information you need, they're going to give you what's easiest for them.
And I think that's a great point too, because again, with all the technology, it's really doing what we tell it to. And sometimes there can be the challenges with garbage in, garbage out. Because the last thing you'd want, Greg, is for the system to automatically read a 1099 miss and think, okay, this is other income, and I'm just going to flow this right into the front page of the 1040. when, as we know now, it really needs to be treated as a gain and loss, and we need to actually be offsetting it with the basis, because that could create significant challenges for a taxpayer.
Right.
Thank you, Greg. Well, the last piece that come into play is there are some consumer grade packages out there. So your client may be using one of these, and they can generate some forms or reports or exports. But there's really some challenges for professionals. They're not really designed for firms. They're not going to have the built-in client management. They're not going to have the ability to collaborate with your client and see what's going inside of there. And they're also not going to give you the ability to manage your firm and your practice within inside the crypto system. Right? Because typically what we're seeing is your crypto clients are going to be some of your highest value, highest net worth and clients inside of there. And so you really need to protect their information, and you're going to want to protect it inside the system. So having that ability to control who can have access to it and see that data is a key thing that we see for professionals in a system. The other thing you're going to find too with most consumer packages is they're not going to be SOC audited. And so they're not going to have that external audit over their internal controls and over the processes and procedures that are underlying that solution or that system. And we know that's a key thing from an accounting perspective. We've also seen challenges too around fee accounting. It can be a very complex area in crypto. We're going to touch on it a little bit and some of the challenges that are inside there. And where fee accounting is starting to become more critical is as the volume of crypto grows, we're also seeing sometimes spikes in fees, where you may be doing a $10,000 or $20,000 transaction that can sometimes generate fees in the order of $250 to $500 if it's, based on a certain percentage of the actual crypto itself. And so if you're not accounting for those fees correctly, it can really overstate the gain or loss and cost your client to have to pay more money, which nobody wants. Now, we also don't see these consumer grade packages typically integrated with professional 1040 tax solutions. So again, there, obviously, SurePrep does a great job in being able to flow that information into a lot of packages. But without a solution like SurePrep, you're left with having to manually enter that information into a return. And then finally, what we've seen from talking with our clients that we're working with so far is when they've got individuals working with different consumer grade solutions, they almost start to become, like an unpaid support desk. When their clients aren't sure, what do I do with this, or what happened inside of this transaction? And then, you're trying to figure out what's happening inside their crypto package if you can get access, and you're really not in a position to help them. And so those are some of the challenges that we see with customer, with accountants, and tax preparers relying on third-party systems to provide crypto tax information. So I think this actually brings us to our second polling question. Greg, do you want to take us? I know we're a little bit off in the order.
Yeah, it's actually not the order, unfortunately. We got the wrong question here, but let's go ahead and launch the second question that we do have loaded. Question is, what is your most important requirement of a crypto tax solution? Does it need to be simple to review and audit? Need to automatically integrate with your tax software, or does it need to be very easy to use for your client? And obviously select the one that is most important to you. They're probably all three of them are important, but select the one that you think is the most important.
And I can see how the answers are trending, Greg, and I'm not surprised.
Right.
Give that a little bit more time.
Yep. Yep, we'll leave this open for about another 10 seconds or so. Looks like about half are selecting needs to be simple to review and audit, not surprised.
Mm-hmm.
And then the majority of the remainder are saying it needs to be easy to use for the client, also not surprised there. All right. Almost 95% have voted. Let's go ahead and close this and share the results real quick. Like I said, about half want it to be simple to review. Yeah, 35% easy for the client to use, and the rest want some tax software integration.
Yeah.
Go ahead and hide that.
Yeah, Greg, I was gonna say, I think that makes a lot of sense, and it really aligns with I think what we see really across both of our different solutions, right? It's really about how do we drive efficiency for the accountant or the tax preparer. We all know it's a numbers game, and it's how much we can do as accurately and quickly as possible, or providing the best experience to our customers. So we can make it simple to review an audit, and then provide a good experience for the taxpayer. Really we're, I was going to say 90% of the way there, but it looks like we're really more like 81%, 83% of the way there, based on our comments. Okay, perfect. So far we've nerded out a little bit on crypto and blockchains and got a little bit of a basis there. Then we've talked about the type of data that we can expect to get from our clients, whether from an exchange or a wallet or a variety of different sources. Now let's talk a little bit about determining taxability and actually calculating the crypto tax. And the couple of key areas we're going to focus on is first off, determining and keeping track of basis. Excuse me. We'll talk about the impact of transfers. And then we'll really kind of dig down into determining the gain and loss in a couple of key scenarios. Okay. Cost basis is really one of the biggest challenges that you're going to face as a preparer on the crypto side. The IRS has been pretty clear in a lot of their frequently asked questions that it's the amount that was spent to acquire the virtual currency, including any fees or commissions or other acquisition costs. And if you've received it in exchange for services or in exchange for property, it's really then based on the fair market value of the crypto at the time that it was acquired. Now, what's unique is that with crypto, when you look at the blockchain, and we really didn't get into this detail, but just kind of keep in mind that nothing around basis or value of the crypto is actually stored on the blockchain. All that's actually there is the quantity. And so as the preparer and accountant, if you're doing this manually, you now have to look at when the transaction took place, look at what the currency is, and then you've got to go find an online source or some historical record to go and actually see what the value of the currency was at that time, what that fair market value was. So you can actually value the transaction as it took place. And that's where you hope your client may be keeping track of that inside of a spreadsheet. You hope the amounts that they grabbed were right. Or you really have to find a solution that can help to automate that part of the process for you and help you determine what the fair market value is at the time the transaction takes place. Now, another situation that you're going to have is transfers between exchanges and transfers between wallets. I think I mentioned earlier that about 80% of crypto holders are actually working and going through an exchange. So while they may keep all of their crypto inside an exchange, it's not uncommon for them to, especially the more active or more aggressive crypto holders, if there's a hot new coin or a hot new token that they've heard about or they've read about, it may only be at a certain exchange someplace. And so they'll want to transfer some of their Bitcoin from, exchange 1 over to exchange 2 so that they can buy that new crypto. Or the opposite can happen as well. So if you've been following a little bit of the crypto news, the SEC has filed a lawsuit against the company that's over Ripple. It used to be one of the more popular cryptocurrencies, and so we're starting to see really a flood of people exiting out of that cryptocurrency and moving back into a different cryptocurrency. So they may be moving some of those funds from one exchange to another to consolidate positions or to help them in managing their portfolios. So what's key though is that if you have multiple digital wallets or accounts, none of those type of transfers are considered to be taxable events. It's no different than me moving money between my savings account into my checking account or from a savings account into a brokerage account. That's not considered to be a taxable event. Now, when we are looking to determine the gain or loss, as we talked about earlier, these are property. Crypto is considered to be property by the IRS, so it's going to be going for capital gain or loss treatment. The same thing from a timing perspective applies. If it's less than a year, it's going to be considered short-term. If it's more than a year, it's going to be considered long-term. And then calculating the gain or loss is the same as you would do for any other type of capital asset. So it's the difference between your adjusted basis and the amount that's received. So again, there's a lot of complexity with the mechanics and the machinations of crypto, but the taxing on it is pretty straightforward once you can get those key pieces of data and information extracted out. Now, when we talk about the sale and disposition of assets, the IRS has identified, four main categories or four main types of transactions that are all going to be considered to be taxable. We're not going to go into airdrops and hard forks and a lot of more technical pieces. Those are really more reserved for futures, and we're not seeing that happening a tremendous amount. Exchanges for virtual goods and virtual currency for goods and services is pretty straightforward, just like a regular sale, and those are going to flow more onto the income side. What we wanted to talk about are really the most common examples that you're likely going to see from your clients. It's that selling crypto for money and exchanging one crypto for another. So if I exchange my crypto, if I sell my crypto on an exchange and get US dollars back, that's no different in the IRS's view than selling my Apple shares and getting dollars back. So it's really just a straightforward determining what the value is of the shares that I'm selling, taking into account any fees, and then comparing that against my basis. And as we talked about, calculating and tracking the basis can be, a bit of a challenge for customers, especially as they're moving things around. And if you remember back to that example that we showed earlier of the reporting that we could get out of an exchange, where you might not have any information about basis that's coming in. It just says that, hey, there's some crypto that came in from an outside source. We don't know what it is. And so that'll be part of the puzzle that have to be figured out if you're doing this manually to track all that information down. Now, the other thing that we typically see, and this is an area that clients may scratch their head out a little bit, is when you're exchanging one crypto for another. So again, back to my example, I've been in Ripple and, the SEC lawsuit's coming in place, so I need to exit out of that. I'm going to move back into Bitcoin. I'm going to move back into Ether. A lot of people think, well, wait a minute, that's it's crypto to crypto. That's a like-kind exchange. But that's not the case. The IRS has come out that's really two separate transactions. So you're actually selling the current crypto to US dollars, and then you're purchasing the new crypto with the proceeds of that, even if it's a complete dollar for dollars. And so because of that, even with your exchange going from one crypto to the other, you need to actually consider that to be a sale and take into account the gains and losses. And that's true too, even if you're buying for goods and services. And I think that's one of the things a lot of people have talked about around crypto too, is if you're using crypto to buy a cup of coffee, people may not realize that every cup of coffee is all of a sudden now creating a capital gain or loss transaction or event that's taking place. And so it's, depending on how active your clients are, you could have, a small number of transactions or none, or you could have hundreds or sometimes even thousands of transactions that you'll need to work with them on and preparing their returns. Now, fees with crypto can start to become very challenging. As you remember, we saw those broken out in that spreadsheet. When you look at the instructions in Form 8949, they're very straightforward in saying that, okay, when you're looking at this, the proceeds or what you receive from it, you need to remove out any of the selling expenses. And so you'll need to make sure that you can isolate out any of those fees, use that in reducing the proceeds. And then, of course, any of the fees required in purchasing it will need to be added back into the basis for determining the gain and loss. Now, where fees can get challenging is sometimes the fees are actually taken out of crypto. So if I'm on an exchange and I'm doing a transaction with Bitcoin, they'll say, okay, it's going to cost you 3 Bitcoin for the transaction. That's what you're actually selling or exchanging. And we're going to, instead of taking the proceeds in US dollars out of it, we're actually going to take the crypto out. So we're going to use a little bit of your crypto that's still left over, maybe 1/100th of a Bitcoin, and we're going to actually use that to pay your fee. Now, what you have to keep in mind is that that's actually considered a disposal event as well, because you're selling crypto in exchange for a service. And so you could have not only the transaction and the gain or loss on paying, trading it for money, for US dollars, but then also you could have a secondary disposal happening on actually using the crypto to pay the fees to the exchange or to the service provider for actually carrying out that transaction for you. So again, all those things need to be taken into account and considered when coming up with your customers' gains and losses. And typically we don't really think of fees as material, but in the crypto world, especially as the transactions get larger, or earlier this year you may have heard of DeFi or decentralized finance. When that got really popular, the cost of doing transactions on the Ethereum network really started to get high. And so we started to see it become a more material piece, and it's something that may really impact how much tax your customers are going to have to pay at the end of the year. So this is where Ledgible Tax Pro comes into play, the solution that we've put together. It's really the only crypto platform designed specifically for professionals. I mean, we've designed it from the very beginning to be focused around collaboration. So you and your clients can work in the system simultaneously and help your clients to have that easy to use experience that you're looking for. It's also got integrated workflow. So it's simple for you to be able to get your clients started, know when your clients are done, know when your clients are procrastinating and not getting things done, so that you can manage your process and work. And then also that ties into that team management. So if you've got preparers and reviewers taking separate roles, that can also be managed inside the system. And once again, our tool and solution is SOC audited. We really try to make crypto as easy as 1, 2, 3. And we'll see this as we kind of go into a little bit more of the detail on the product. Start off by inviting your clients in the system. They enter their exchanges and wallet information. We do everything else, and the system will automatically generate an 8949. So it's almost, think of it as a brokerage statement for crypto. And then as we dig a little bit deeper inside of it, we actually have integrations into all of the exchanges and run our own blockchain nodes so that we can actually pull all the data directly from the sources and bring it automatically into the system. We do the work of matching all the different transactions. So when we saw that one where we just knew that we had ETH coming in, but we had no idea where it came from or what the basis was, we can figure that out, and we can look across all the different wallets and the exchanges, the other activity on exchanges, and we can see that, okay, this ETH left here and it came in here, and it was worth $100 over here, and now it's worth, and this is where we're going to use the basis when the transaction took place. And then we have industry-leading fee accounting capabilities. So that we can ensure that your clients are paying the most accurate amount on calculating taxes and the impact that fees have with gains and losses. Greg, I think this actually brings us now to our third polling question before we learn a little bit more about SurePrep.
Yeah, let me go ahead and launch this one. Question is, what tax software do you use to prepare 1040s? You see several listed there. While we give people time to answer this question, let me explain why we're asking it. John just gave everybody a high-level overview of the Ledgible Tax Pro solution, and once we close this poll, I'm going to give everybody a very high-level overview of the SurePrep solutions. With Ledgible Tax Pro, John, correct me if I'm wrong, there is no tax software integration, so there's no requirement to use this specific tax software. Is that correct?
Right, so just maybe a little bit of a tweak on that is that we could actually provide out the exports to go into, and we're integrating into all the different softwares.
Okay, good. So for SurePrep solutions, to use our scan and populate solution, in other words, to use our OCR software that will extract data from documents and export it to your tax software, you've got to be using one of the tax softwares listed here in this polling question. So either CCH Access Tax or ProSystem or GoSystem Lacert or UltraTax. If you're not using one of those tax softwares, you would not be able to use our scan and populate solution. You could still use some of the other tools that we're gonna talk about, but SurePrep's software will not export that data to your tax software. We've got about 92% voted. We'll leave this open for just a little bit longer here, give people a last-minute chance to answer this.
And Greg, while people are wrapping up, I think one thing I did want to add is what's great about Ledgible Tax Pro is we will generate the form 8949. So worst case, that could always be attached to a return in a different system, whether it's a PDF attachment for electronic filing or printed out and included for paper filing.
Right, exactly. Okay, let me go ahead and close this. We'll share the results very quickly. Looks like about half of the today's attendees are using other tax software. But to be clear, doesn't mean you can't use Ledgible Tax Pro. Doesn't mean you can't be a SurePrep customer. You just wouldn't be able to use one of our solutions that exports the data to your tax software. So let me go ahead and hide that. And then if you move to the next slide, John, I'll as I said, I was going to give just a real high-level overview of the SurePrep solutions. So that circular image there on the left side is meant to represent the process, the whole workflow of preparing a 1040. So if you've got your client there, Tom Taxpayer, in the middle, the top right quadrant, what we refer to as the gather phase, is where you're requesting documents and receiving documents from your client so that you can prepare their tax return. So you might be mailing out a paper organizer in January, or maybe you've got a portal solution or something like that. You may be using some tool, some software tool, or just an old school paper organizer to request and receive those documents from your clients. If you were a SurePrep customer, you would use our award-winning client collaboration system called TaxCaddy, and it makes it really easy for you to request and receive documents. It looks to the pro forma tax data in your tax software and will automatically create a customized document request list for every client. Makes it really easy for them to see the list of things that they need to provide to you and to actually provide those things. And then once you've got everything that you need to prepare the return, or maybe not everything, maybe you set a 80% or 90% threshold. Once you have most of the documents and the data that you need to prepare the return, you click a button and those documents all run through our OCR scan and populate solution called 1040 Scan. And there are technically 4 different versions of 1040 Scan. I won't go into too much detail there. As I mentioned, if you're using tax software that we integrate with, you could use the version that will actually export the data. If you do not use tax software that we integrate with, you could use the version that will just automatically bookmark and organize all of the documents into like a paperless binder so that you can prepare the return that way. But that happens in the prepare phase. And then lower left quadrant there, what we call the review phase, you've got the bookmarked and organized source documents, so all of the W-2s and 1099s and the 8949 and everything that you need to prepare the return in a paperless work paper system that we call SP Binder. Makes it really easy for preparers to finish their work and for reviewers to review the work and sign off on everything. And essentially, once the return is finalized, the return and the your invoice and even the payment stubs can be delivered back to the client in TaxCaddy. So, if you move to the next slide, John, this combination of TaxCaddy and 1040 Scan and SP Binder will really allow you to benefit at each of these 4 phases. So you reduce the administrative costs. You're not having to print and mail, organizers and then receive them and do whatever you do with them. Maybe you scan the paper documents or you just use the paper to prepare the return. So it really streamlines that process and reduces the costs. The work paper preparation is really automated. The review of the work papers and of the return is very, very efficient. And you really improve the client service because by offering this mobile-enabled client collaboration system called TaxCaddy, you're giving clients the modern conveniences that they expect these days. Imagine banking at a bank and your only option to deposit the bank was to go in and wait in line and handwrite a deposit slip and deposit it that way. You probably wouldn't bank there. And so TaxCaddy really gives your clients a really modern way to collaborate with you. So we want to move to the next slide, John, and you want to talk a little bit about this workflow?
Yeah, no, definitely. Thank you, Greg. So in the last couple minutes that we've got in the presentation, we really wanted to kind of show you is really what a best-in-class integrated process for crypto tax automation can look like. And so I wanted to kind of give you just a quick kind of high-level overview or roadmap for what we're going to be taking a look at. So we've got 2 different levels here. So at the bottom, we've got the work that's happening inside the firm by the preparers. And at the top, we've actually got the work that's going to be happening with the taxpayer. And so as we get started, Greg's going to show you that award-winning TaxCaddy interface and how you can put that organizer together, send it out to your client. We're going to see the client answering the questions around it. and then we'll get them invited, because they've got crypto, we capture that inside the organizer. We're then going to get them invited into Ledgible Tax Pro, where they can go ahead and enter in all their data. Once that's done, they'll notify you through the workflow. You can then review it, quickly generate the 8949, and then Greg will show us how you can pull that right into SurePrep and then get that information flowed through the review process and right into the return itself. So Greg, you want to start us off?
Yeah, sure. So this first screen that we're showing here is the SurePrep Tax Caddy client management screen, and you see we've got just one client there. His name's Jack Anderson, and in the lower right corner, a little toast notification that shows that we sent Jack his questionnaire. So this is what someone in your office would be doing. You could do this in bulk. You could send it one off to an individual client or all clients at the same time. But basically, the first step is send the questionnaire that's going to include, among other things, the question about the cryptocurrency. And so if you go to the next slide there, now we're in Jack Anderson's Tax Caddy account. So this is the taxpayer interface. And here, Jack is looking at his questionnaire, sees the question about the cryptocurrency and says, yes, I did. And that's our indicator to know that we now need to invite Jack to create his Ledgible account. But if you move to the next slide there, now this is where the firm, this is where they see the answers to the questionnaire questions. And like I said, if a client has answered yes to this question, next step would be, and John, this is where you'll take it, invite them to create their Ledgible account.
Perfect. Yep, exactly right, Greg. So it's really easy and Ledgible. All we need is the client's name and their email address, and we can get them invited and set up inside an account. A couple of things I just wanted to point out here real quickly is we do support multiple tax calculation methods. So we can do a FIFO or a LIFO or type of an approach for actually calculating the gains and losses. And then one other thing too is we have a control for the taxpayer as whether or not they're actually consenting for you to see the data. So what's nice here is that the taxpayer has control over the privacy if they want to keep their crypto data really secure, but you can still actually then generate and pull all the reports you need for doing their tax return out of the system. Now, I also wanted to show the team management piece because, Jack is really one of our high net worth clients, and so we want to be able to control and just have Pam the preparer work on his account and nobody else have access to it or be able to see it. Now, I'm stepping into Jack's shoes, and as Jack, I've received an email now that's inviting me to go ahead and create my Ledgible account. Pam gave me a heads up that this was going to help me automate my crypto and make it easier for me. Once I create my account, the system actually walks you through the process of being able to get everything set up and going. I can easily come in and create wallets or connections to my exchange, just put in that public address that we saw earlier. And instead of having to look that up or do anything with it, I enter that into the system, and the system then automatically goes out and pulls all the transactions from the appropriate blockchain right into the system. I can also set up my wallets, my exchanges, and it'll either link in and automatically pull that information out, or it's easy to import that information into the system. Now, once that's all done, that's really where the magic inside the software happens. We go through with all the information we've pulled out, we bring it all together, we identify all the transactions for you that are taxable disposals, and then we go through and figure out what the basis is based on that FIFO or LIFO approach, and calculate then what the individual gain or loss is for you. And then, to make it easy and simple for you to review and audit it, we also then provide you the ability to drill down under each one of those so you can see exactly how we're calculating the basis and where that basis is coming from. And we'd even show you if it came from a different exchange and the flow of that. And if you've got some really old school crypto clients where the cost basis may need some adjustments or some changes, you can actually go and make those edits and changes right inside the system. Now, as I'm looking at things, this is a great summary before I submit it back to you to go through and say, okay, let me give this a smell test, a sniff test. This is the number of wallets, the number of orders that I had. Does this look right about the number of trades that I did and the different types, and how this year compared to last year? When it looks great, I can actually then click a quick button and send it information and can submit it right back to my preparer. I get my congratulations saying that I'm all set with all my crypto work. and the preparer then gets notified. So now you can see the workflow has moved over into the client submitted stage. If need be, I can actually go right into the same view that the client saw, so I can go in and review and see any of the information or make any adjustments or changes. But when everything's ready to go, it's very simple to come in and generate a report. So in this case, I'm going to go ahead and generate out that 8949. Once it's ready, I can download it. You can see we generate a PDF version of the form that's ready to be filed, or more appropriately, Greg, tell us how that gets routed into SurePrep.
Sure. So once the 8949 is ready, you basically, drag and drop it into this client's, Jack Anderson's tax caddy account. So this screen is what you'd see when you're essentially uploading it to Jack's account. And once it's there, John, if you go to the next slide, it will be included in all of Jack's work papers. So he probably already gave you his W-2 and 1099s and all the other documents that are needed to prepare his return. Now you've got the 8949 excuse me, in his work papers, and this is the screen that you'd see after adding it to the binder. And if you move to the next slide there, this is a screenshot of SP Binder. I mentioned this is our work paper system. There's the 8949 that came out of Ledgible Tax Pro. It's been recognized by 1040 Scan. The 8949 is now what we call a standard document, which simply means a document that our 1040 Scan software will recognize. It does not recognize all documents, obviously, but if you want to compare to some of the competing products on the market, 1040 Scan recognizes 4 to 7 times as many documents, this 8949 being a new one. So software recognizes what it is, bookmarks and organizes it into the appropriate place in the work papers. And you'll see, probably a little hard to see, down below, you see a couple of little annotations and tick marks. So the data has actually been automatically extracted from the 8949 here, and then eventually exported to tax software. So the next slide, I believe this is CCH Access Tax. So if you use CCH Access Tax, this might look familiar. If you use some other tax software, this might look a little different, but this is what it would look like in the tax software. So, Ledgible Tax Pro is doing its job, and the 8949 gets added to the work papers, and data gets extracted automatically and eventually exported to your tax software to essentially complete that process.
And I think when we sat down on the Ledgible side with the folks at SurePrep, we really recognize that as tax professionals, this could be a very challenging area for you. In managing crypto tax and collecting the data and integrating it into your workflow. And so that's really why we collaborated together to build out this process and to get the 8949 recognized as a scannable document. Because we know a lot of professionals invested a lot in their workflow and that automation, and we want to make it just as easy as possible and seamless for crypto to sit inside there. And even for clients that are considering moving into that type of a process, the combination of these two technologies can really open the opportunity for you to service, again, those 12 to 21 million taxpayers are going to need to file crypto tax returns this year. So yeah, again, a great walkthrough, and appreciate that. I think that brings us to our last polling question. Greg?
It does. Let's launch that very quickly here. We've got just about 2 minutes left. So as soon as we give everybody enough time to answer this question, Christopher, if you want to come on and sort of wrap it up. Unfortunately, excuse me, we went a little longer than we had anticipated, so we didn't have time to do Q&A on the call. But as I mentioned earlier, everybody that asked a question will get an answer. We will just have to follow up with you, via email in the coming days.
All
So
right.
I mentioned 1040 scan. It doesn't recognize every document that you run through it, but we recognize 4 to 7 times as many documents as the competition. This is a list of the competition. So if you're using one of these scan and populate solutions, let us know, and just keep in mind that 1040 scan will certainly recognize many more documents than whatever you're using now. We've got about a minute left. Christopher, do you want to wrap it up while we leave this polling question open?
Absolutely. So as we're getting ready to wrap up with today's webinar, we here at CPA Academy will process your credit later today, and that'll be available in your CPA Academy accounts within 24 hours. Everyone will also have an opportunity for a full webinar evaluation, and those links to the evaluation are available in your CPA Academy accounts as well as your email. And a special thank you to our wonderful presenters today, John and Greg, for a great presentation. We are so appreciative of your time and your insights. And a warm thank you to all of you in the audience for joining us as well. We urge you to take a look at your CPA Academy My Account page and see all the resources we've made available to you there, and take a look at the other fantastic webinars we're able to offer. We hope to see you all on future webinars, and have a great rest of your day. Thanks so much for joining us.
Thanks, everyone.
Thank you, everybody, and have a great and safe, happy New Year. And we'll all toast the end of 2020 and ready to start a new year.
Yes. Good riddance.